Dividend investing in 2023 has gotten a pretty bad reputation. Most dividend stocks have not performed alongside the overall performance of the S&P 500, and if we compare that to the performance of the Nasdaq 100, it looks even worse. I wouldn't consider myself a dividend investor as I hold various holdings across my portfolio. However, with SCHD being one of my biggest holdings, the lack of performance of the fund has held the stock portfolio back this year. Or did it? Stick around, because in this video, we will go over some of my dividend investing strategies that I have been implementing with ticker symbol SCHD. Now, before we get started, be sure to hit that like button and subscribe. It's your favorite investor, and this is the channel to help keep you invested and build your wealth. Now, SCHD is a dividend-focused ETF that invests in blue-chip companies and seeks to track the investments of the Dow Jones Industrial. The fund likes companies that have a tendency to grow capital and distribute consistent dividends. Over the last decade, it has grown 110% and pays a consistent dividend throughout that entire time. However, in 2023, this seems to not be the case as the S&P 500 is up over 12%, while SCHD is down 6%. So what gives? Well, the surge in S&P 500 price this year has been due to the outperformance of tech stocks. Tech stocks had a huge rally to start the year, and with the S&P 500 holding 28% tech and big cap names, this is really why the S&P has moved so much and our beloved dividend fund has not. However, if you have been paying attention, this presents quite the opportunity. Some investors this year have moved away from dividend-paying stocks to chase tech high flyers. However, I believe that savvy investors have found that deals are present in the large cap names that pay dividends. Companies such as Texas Instruments, Cisco, Merck & Company, discounts across the board on great businesses. SCHD will underperform the market this year as tech leads the rally. There's no doubt about that. But if you survived and held SCHD this year, then you finished the year with more shares than you started with. You bought SCHD at better prices than you would have in 2022. You also have gotten consistent dividend payments with what I believe to be SCHD's largest dividend payment upcoming in December to close out quarter 4. If the pain of SCHD underperforming the markets stung, then it could be because you aren't diversified enough. I hold 3 big holdings in the portfolio to help mitigate this. IVV, or the S&P 500, SCHD, and XLK for my technology fund. These give me exposure to the overall market, dividend growth, and technology. I believe this is a great mix to get complete exposure. Investing in the stock market is a testament to surviving the emotional roller coaster it wants to put you through. So to cap things off, there's nothing wrong with SCHD. It is performing as it should. Investors were risk on to start the year, and investors aren't necessarily attracted to dividend-paying companies when they can simply put their money in bonds and get a 5% risk-free. So keep these things in mind. Personally, I am in the building wealth stage, and I will gladly take shares of SCHD on discount. Current share price is currently at about $69, and this is an attractive price point for me. So I'm going to continue to buy shares as much as I possibly can at this price point and hope that it all works out in the future. Anyways, if you made it this far in the video, I hope you got some value from it, and be sure to check out thebestdividendcalculator.com to start putting together your plan to build wealth. As always, thank you for watching, and be sure to hit that like button and subscribe for more financial content. It's your favorite investor, and I'll catch you on the next one. Peace.